But in the thick of earnings, let's take stock of another set. We've got with us the MD at STL, Ankit Agarwal, joining in the show right now. Ankit, hi, good morning. Good to have you on the show. I'm just going through what your numbers are looking like. And firstly, just wanted to understand about this provisioning figure of 164 crore rupees. Just help us understand that a little bit more.
Sure. Good morning. Thank you for having me on the show. As we shared with our on our press release and as well as on our investor call yesterday, these are essentially one-time provisions where we have also broken out in terms of impact to the top line to our revenue at about 48 crores and other items around 15 crores. So cumulative around 60 crores on a top line impact and on the middle line impact of close to around 115 crores. So overall, this has been an impact that has due to provisions where we wanted to do the right kind of conservative accounting and ensure that we are accounting for these provisions. We are still putting in the efforts to ensure that we can still collect these amounts. But from a prudent accounting perspective, we want to take these provisions. We just want to ensure that the underlying business is extremely strong. We continue to have very strong order books as well as extremely strong growth as we've shared in our focus markets in the US and Europe in particular.
Okay, so Ankit, would it be fair to say that this is just a one-off provisioning, or are we going to continue to see this in the next few quarters as well? Because no one was really anticipating a provisioning here.
Yeah, absolutely. So we are confident that these are one-off provisions. Even what we have shared with the investors is that these are actually related to items as far back as 18 to 24 months ago. And so we wanted to make sure that while the efforts continue to recuperate these amounts, we believe that these are right time from accounting perspective. And these are not written off. Just want to reiterate, these are one-time provisions that we have taken.
Okay, last time when we spoke about capex coming back, telecom sector becoming much more stable. We spoke about that 5G is going to be a great business opportunity. When do you see that curve starting?
Very good. So I think, in fact, we've already started seeing that. Just want to share some data points, not only in India, but globally. China just announced that they have already completed launch of 1.5, 1.3 million base stations for 5G and are planning to take it up to north of 3 million base stations. So they are clearly investing and continuing to invest on massive amounts of both wired and wireless infrastructure for their 5G rollout. They have close to 400 to 500 million subscribers and very clear they want to take it to 1 billion plus subscribers in the next 2-3 years. Similarly, South Korea has already achieved more than 20 million 5G subscribers, which is incredible for size of their population. And we see 5 large operators in Europe and another 2 or 3 in US really taking the charge in terms of 5G. So we already see massive fiber build-outs starting to happen in these markets. And we continue to believe that the market will be very strong, both for our wired and wireless offering on the back of this. We believe internally that this is at least a 5 to 7 year network build out, if not for 10 years.
Let's ask you a direct question. When do you see the first order from the 5G business kicking in?
So actually, we already see strong demand in Europe and US for fiber networks linked to the 5G. So I would say that's something we're already starting to see. On a wireless portfolio, we also just announced our win in terms of our supply of our Garuda small cells with ASOCs. And we also have launched our radio units for 5G, which we believe will come out in the next 4 to 6 months. So as we launch more and more of these wireless solutions, we believe we can have a larger play in 5G. One of the other elements that is becoming very critical is a complete end-to-end fiber network across the cities to enable a robust 5G network. On the back of that, we have also currently shared that we have an order book of almost 300 crores, which we were able to get in the last quarter, particularly in the US market. And a lot of this is specifically linked to building out a robust fiber network across cities, what we call as carpet coverage, to ensure that every single small cell and macro cell for 5G is backhauled on fiber.
Good morning. This is Nantara. So I'd like to just take this point further. I was reading how recently you talked about doing these lab tests for 5G, which you're doing in India, you're doing in UK, Taiwan, and Japan too, if I'm not mistaken. Can you put it in context for us? And when you're doing this kind of testing, these lab tests, where India stands vis-a-vis the others, where you're doing the tests?
Yeah, good question. So I think the context for that was in two parts. One is we are definitely taking a step forward very positively on building our own made in India ORAN solutions. That's something we're very proud of. So we're focusing on the radio units, both in terms of macro outdoor as well as indoor small cells. Because actually one thing to also think of is 80% of data will actually be consumed indoors. So while everyone talks of these large radios for outdoor coverage, it's equally important in a 5G environment, particularly to have very strong indoor coverage. So that's something that we have been focusing on in our customer discussions on really what is the form factor, what is the weight, what is the wind load factor, what is the power requirements. All of these become very critical in these environments. So very happy to share that some very positive developments with our customers. The way it typically works is that based on customer requirements, you create general availability for your products. Then it goes into either lab trial and then very quickly into field trial. And that's the phase we are in with a lot of our customers. And we believe that this shift from now lab trial and field trial to larger scale deployments will happen in the next probably 9 to 12 months.
And that will be in India too, the lab test to the field test, because I'm just trying to get a sense of whether India is meeting the 5G bus with the rest of the world.
So I think we're pretty excited on 5G in India. What we see is two or three things. One, definitely we hope the spectrum auctions will happen probably by mid of this year, and some level of deployments in the major 8-10 cities should happen by towards the end of this year. We also believe that India should have around 150 to 200 million subscribers by 2025. So I think that's something that we're pretty well placed. We also see the 5G handset prices coming down quite quickly. So I think that will also further enable people to shift towards 5G networks. I think the critical part, as has been debated a lot, has to be around the spectrum pricing. I think that will be extremely important. And I think the government is looking at it in the right way to ensure that maximum amount of investment goes into building these networks rather than going into the government's kitty. If anything, the government should ensure that the right kind of environment is created and the right amount of spectrum is available to ensure a world-class 5G network in India. As we see clearly, a lot of the leading countries across Europe and also in China have taken a leap ahead in terms of 5G deployments. But I'm very confident that India can catch up very quickly and probably also start thinking about 6G as well.
I don't have 5G, you're already dreaming of 6G, Ankit. But before we let you go, you made it quite clear to Aisha right on top of the interview that the one-off that we saw is only for the quarter. But even when you make that adjustment, the EBITDA has contracted. We're also talking at a time when there is inflation. I would imagine, is that also because fiber costs are going up? And how do you see that panning out? And what does it mean for your business and the order book at large?
Yeah, absolutely. So what we discussed yesterday was that essentially there's 2 or 3 elements at play. One, we are seeing a lower EBITDA margin because of a conscious shift from public sector in India to private sector. That we believe will probably continue for next 1 to 2 quarters, and then our margins will improve again to normalized levels. The second shift we're doing is also consciously from just being India focused on our services to also significantly growing in our UK business. We actually believe in the medium term, about 25% of our services revenue will actually come from the UK, which is definitely healthier margins. On the products business, on our optical fiber and interconnect business, we have seen some impact of inflation as well as logistics costs. As our business has been growing, particularly in Europe and US, we have seen some impact of container costs, etc., as we continue to grow our exports into those markets. One of the other levers in this also is as our facilities come up in the US and UK over the next 6 months, we do believe that some of these costs will also be managed. So we continue to be positive. Our products business will continue to be at north of 20% EBITDA. And as we continue to improve our margins on the services in particular, I think our normalized levels of 17 to 18%, which we have guided, will come back in probably a couple of quarters.
Okay. With that, Ankit, I'd like to thank you for taking the time out and for joining us today live here on ET Now.
Thank you. Thank you very much.